So Wayne, in terms of giving, I hear your philosophy here is not to just give cash. There's a different way to do this. Can you unpack that for us?
Yeah, sure. I mean, there's times and places for cash, but if we can do strategic charitable giving over time, then we can frequently create more bang for your buck in terms of the tax deduction you get from the actual charitable gift. Number one, and number two, have more impact or magnify the impact for the charity or organization. Here's what I mean by that. There's a couple of different strategic planning items. So first of all, if you're in your 70s, there's something called a QCD, a Qualified Charitable Distribution, where the IRS is forcing you to do required minimum distributions from your retirement accounts. You can give up to $100,000 a year from your retirement account directly to the charity of your choice, never actually recognize the income, and magnify the impact of your gift. So you can do it direct from your retirement account to the charity, never have to recognize the income. That's called a QCD. Another initial is a DAF, a donor advised fund. So when you're in the peak earning years, we will frequently work with you to figure out how can we bunch your future charitable contributions when you'll be in lower tax brackets into these years where you're in your highest marginal tax bracket, highest marginal income years. So how can we bunch those contributions, and how can we use stock or appreciated assets to go into that? So for instance, we have a client that owned 50% of a family farm. Well, we actually donated their half of the family farm into their donor advised fund right before it went to auction. And so they did not have to recognize the capital gains on the sale of the farm, and they got a huge tax deduction that we're still using years later to convert IRA money into Roth IRA money and knock down the tax liability on doing that. So that's a decade-long strategy for us to utilize that appreciated gift with a very low basis, maximize the value of the gift, maximize the impact, and then use that to convert IRA money into Roth IRA money. So all of that's using what's called a donor advised fund. So QCDs, DAFs, ABCs, PDQs, all the other initials that go on in this strategy, but it's not a kind of a one and done, but it is frequently third or fourth quarter of a year where those conversations are being had with the client, because we're recognizing, oh, this is that first year I'm popping up into that 37% tax bracket. Now it matters.